earn more money but too busy to start a side hustle? Do it the right way and teach your money to make more money for yourself, even when you're asleep. Dale Corpus will show you just how here on the School of Cash Flow. With his entrepreneurial mindset and extensive experience in real estate and finance, Dale will help you become a responsible, strategic, and passionate passive real estate investor. Learn how you can increase your earnings or find more ways to make money, only here on the School of Cash Flow.
Good afternoon, everybody, and welcome to the School of Cash Flow. I'm the host, Dale Corpus. I love chatting with people about building wealth and passive income through real estate, and it's a really huge passion of mine. And we're all in different stages of building this wealth and growing our knowledge in this space. And I'm really honored to bring on my guest for today. He's a local guest. He's from the Bay Area. His name is Sean Pan, and he's got his own Bay Area based real estate meetup group, plus a thriving and established podcast as well. He's connected in the local real estate space as he's a private money lender, and as well as the real estate investing space as he's a big out-of-state investor himself. So out-of-state investing is going to be the core topic today, and I really wanted to pick his brain about that, especially since most people tend to like to only think they can invest locally, where they live, but that's not the case with Sean. So here's a little bit more about Sean. So in addition to being a real estate investor and a hard money lender based in the Bay Area, in the past 5 years, Sean has flipped homes in the Bay Area and owns a portfolio of 21 units out of state with his fiance. So in today's episode, Sean's going to talk about how to get started investing out of state and some of the key things to watch out for. So jumping right into this, thanks, Sean, for being a guest on my episode today. How are you?
Absolutely. Yeah. Dale, thank you so much for having me on your show. Really appreciate it.
No, it's again, and likewise, I wanted to appreciate for you having me on your show in the past. It's just, I know that we got connected through our friend, Adam Carswell, and it's just great, that we're able to network through podcasts. And again, thanks for your time on this. So can you give my listeners a little bit more about your background and what your current focus is?
Yeah, absolutely. So, hey everyone, my name is Sean, based in the Bay Area. Before I got into real estate investing and being in the real estate space, I was actually an engineer. So I went to school over at UCLA. I studied electrical engineering, and I worked in the defense contracting field for about 7 years. The thing was, during that time, I was working on some interesting projects, working on some satellites. I didn't feel fulfilled, and I didn't feel like this is where I was going to be, 10 years down the line, 20 years down the line. That's why I want to try to start my own business. I started many different small businesses like online shops, e-commerce, and all that stuff, but nothing really clicked for me until I got into real estate investing. I started going to local real estate investing groups. The people there were all super friendly, super nice. And just by hanging out with everybody, you start making investments, your portfolio starts to grow. And I just got really sucked into the real estate space. So about 2 years ago, I actually left my full-time job as an engineer to pursue real estate full-time. And like you mentioned, I have a podcast, I have a meetup group and a YouTube channel. And from that, I've kind of gathered this small following of people. And I was referring them so much business as for loans that I became a lender myself. So now I focus mostly on, buying more properties out of state with my fiance. And I also do hard money loans for a lot of our clients.
Okay. No, that's amazing. I mean, one thing I actually wanted to go back to is this, the fact that I saw a Facebook post and I want to congratulate you that you were featured by Business Insider last month about how you and your fiance built your 21 unit rental portfolio. So kudos to that. Was that something, that's when you first got your first investment? Was that something that you're working towards, that you knew you want to get a specific number of doors, or what was that progression like? Tell me about your first property and how did that go? A lot of times people in the Bay Area don't even think about buying investment property. They only focus on buying a primary residence. So I don't know how it worked for you. Did you buy primary residence? Did you buy investment property first?
Yeah, great question. I actually started by buying my primary residence. And then I had extra rooms in the home. So I house hacked, which meant that I actually rented out all the individual rooms to some of my friends. So, there are a lot of people like me who are also from Los Angeles, moved up to the Bay Area for more job opportunities, and they need a place to stay. I didn't really want to rent out to random people, so I rented out to my friends, and it all worked out really well because now I'm getting paid for all of these extra rooms. It dramatically lowered my cost of living expenses. So then I could have more funds to invest in other things. So don't get me wrong, I still invest in like stocks and crypto. So real estate was just like a diversification of that portfolio.
Okay.
After I had that first property, I listened to a lot of other podcasts. I read a lot of books, joined meetup groups, and I understood the power of cash flow. So the original reason why I invested in real estate in the first place was because I wanted that passive stream of cash flow, so that if something happened with my job, if I didn't want to stay there for long term, or if I wanted to, like say, do a startup like the Bay Area dream, then I wouldn't be at home, eating ramen for 2 years while making my startup dreams come true. And that's why I decided to invest in real estate, because you could get cash flow, and it's a relatively simple business once you create the team.
Got it. That makes sense. And just as a quick reminder, it's like both you and I have a similar background in that for college that we ended up getting engineering degrees. But like here we are in the real estate space, and it looks like we're both loving it. And it's like, it's our passion. I'm curious, were you also exposed to, the idea of real estate investing even younger through family, or was this something that you stumbled upon yourself without, getting directed by family or friends?
So I would say yes and no for that answer. My dad is a broker based in the Bay Area, and growing up, I have seen him just be in that real estate space as a sales agent. Okay. But I say no because he wasn't in the investing space. So he does work as a property manager. And I saw from my point of view, like being an agent or being a property manager, like that's not really something that I really want to focus on, because, it seemed, I don't know, like not passive, right? Like you're very active with your business. As a property manager, especially, you're getting pulled from both sides. The clients are kind of talking to you about how their tenants are not performing or whatever. And tenants are always complaining to the property manager that there's all these fixes that need to be done. Yep. So I was like, I don't want to do that. But then when I started reading more books or listening to more podcasts, I understood how investing really worked. And then, of course, once I was interested in investing, I could then rely on my dad and say, hey, like, what are some things to look at when you're buying a property? And he was able to help guide me through that process.
Okay, got it. The first property that you talked about that you did a house hack on, was that in California by chance?
Yeah, it's actually this house right here in the Bay Area.
Okay, excellent. And so from there, what was the progression like? So what was your next property after that? Was it an investment property?
Correct. The next property was investment property. And then by that time, I already knew, like, buying a rental property in the Bay Area as like your first rental probably doesn't make sense from a cash flow perspective. Again, I talked to hundreds of people on my podcast. I met with hundreds of people through networking groups. And I've come to realize that investment properties have two different like plays, right? You have the cash flow play and appreciation play. The most money you're going to get is probably from the appreciation play. But when you're just starting out, you may not have that luxury. As an example, this property that I bought here in the Bay Area, when I purchased it, the value was around $650,000. That's what it was appraised for back in 2015. Recently, a neighbor 2 doors down sold their property for almost $1.3 million. So, that's like a $600,000 gain in 5 years. Whereas my cash flowing properties probably won't give me $500,000 or $600,000 in that time frame. But the thing is, to hold on to these properties is very difficult because first of all, you have to qualify because of the loan. And second of all, the rent you're going to get from a property in the Bay Area the rents won't cover your principal, interest, taxes, and insurance, right? So you're going to be cash flow negative every single month. Mm-hmm. So to make a long story short, next property I bought was out of state. I actually bought it in Jacksonville, Florida. And I guess the reason why I bought it in Jacksonville was because I was attending all of these real estate meetup groups, and they were consistently talking about several markets that made sense for investment. But of those cities, Jacksonville made the most sense to me because I was comfortable with the climate there. They had hurricanes, but no snow. I liked how it was landlord friendly, and the price to rent ratios were pretty good. So I ended up buying a property for around $77,000, and it rented for around $900 a month at the time. So this satisfies something called the 1% rule. The 1% rule is just a general rule of thumb that states that your monthly rents should be 1% or greater than your purchase price. So again, in this example, if I'm buying something for $77,000, then it should rent for $770 per month or more.
Got it. What kind of property was it? A detached single family residence, I take it?
Correct. This one was a single family property.
Was it a turnkey or did it require a lot of work, or what kind of properties do you typically go for?
So I don't go for turnkey properties that are already like all made up from a turnkey provider. Typically, these are going to be just homes that were already rented out from someone else. They may need some deferred maintenance. For this particular property, we didn't do any extra work on it directly, but we did know that a few years down the line, there's going to be some repairs. For this particular example, we knew the roof wasn't too good and it will be a few years until we have to replace it. And then here we are almost 5 years later, and I'm replacing the roof right now. So that's a pretty big expense, but luckily I've saved up enough money to pay for that.
Okay. And how did you end up, like the fact that you house hacked over in the Bay Area, how did you end up buying this deal out of state? How did you fund it?
This was through conventional financing. So during that time, I was working as an engineer, and I did have enough savings and like the debt to income ratio to qualify for this loan.
Okay, got you. And then from there, did you start building out your portfolio in that area since you were starting to build your team and networks around there, or how did that come about?
Yeah, I mean, that's like the funniest thing. Like when people first get the idea of buying out of state, they get pretty nervous, they do a lot of analysis, and they tend to kind of sit on the sidelines for a long time. But once they buy the first property, they get the bug and they want to buy more and more and more and more. So same thing happened to me. Right when I got one property, I was immediately looking for my second property. So pretty much within like a few weeks, I closed on a second property. This one was a little bit different though, because we found this one on auction.com and not just through the regular MLS. So we're buying it completely as is condition, blind. So we didn't have an inspection or anything like that. Luckily, that property, we were able to get it at such a significant discount that the repairs we did on it were still like negligible. Like we were still okay. We probably bought it for $40,000 and then we put in around $15,000 into the property. And then it rented for like 800 or so. So did really well in terms of our numbers.
Okay. Since these properties were out of state, and did you fly out there and see these properties firsthand before you made offers, or what was that like, or how did you handle that?
Yeah, so actually I didn't even fly over there until I actually had 6 units under my belt. The first thing I did though is like try to create a team. That's probably the most important thing you need to do. Find a team that you trust there. And really there's no way around it besides making a lot of phone calls, talking to people, and seeing kind of who you trust based on that conversation. I found a great agent. He referred me to a great property manager. The property manager referred me to a great contractor, et cetera, et cetera. We did one deal, it closed. The property was managed. I was getting my checks. So I felt comfortable with just doing more and more deals like that.
Okay. You talked about, your team and these key players, and I wanted to, just check. It's like, it was the main key player first that you found? Was it a local realtor in the area? Like even just for in general, if it weren't that state or somebody else, like what is the main key player or players first that you should be looking for? And how do you go about finding them?
That's a great question. In this particular case, the agent was the first key player that I connected with. But I would say in general, because now we're in different markets, the most important person is really going to be your property manager. So you can have great agents, but if you don't have a great property manager, then that market may not be the one that you go with. Because with a realtor, they're amazing. They're going to help you find good deals. But after the deal is done, someone needs to be there to actually make sure that your investment like pulls through.
Right.
That's why you need a great property manager. So how do you find them? There are some amazing forums online, like biggerpockets.com. It's an amazing forum where you can go, just type in the city that you're interested in and just ask basic questions on the forum. Like, hey, what are some great zip codes to invest in X city? And then you're going to get a lot of people responding to it. Just call those people. There's a good chance that those people are more investor savvy realtors or property managers who are willing to talk to you and kind of explain the demographics and the different pockets of that market that you're talking about.
That makes sense. And then, are you mainly focused in just that one area, or have you also now ventured out into other states, geographic locations?
Yeah, so we have branched out. So we are in Florida, we're in Georgia, we're in Texas. My fiance has a property over here in the East Bay as well.
Yeah. And then in terms of, the different locations, since you did it in one place, did you basically follow the same method so that you could build the same networks out in all of these other locations?
Yeah, pretty much. The hardest part really is finding that target market in the first place. There are thousands and thousands of cities in the United States. How do you pick the right cities to go with, right? So that's one key thing that we did. We put in the work to find out what are some cities that fit our buying criteria. And then we started aggressively talking to people, making connections to build out our team.
Yep. Can you expand more on that, like buying criteria? Is there certain criteria for that metropolitan area you're looking for? I mean, like job growth, population growth, stuff like that. Like, what do you focus on?
Yeah, great question. So, we follow someone else's methodology. Neil Bawa, he's also a local real estate investor here.
Yep.
He also invests all over the place with syndications mostly. So we basically go on this website called Department of Numbers/jobs. It will show you like the job growth of all the different major metros in the United States. You basically want to pick the places that have, job growth above 2% per year.
Mm-hmm.
Obviously with COVID, we had a big down and now we have a lot of ups. So now job growth percentages are all out of whack. But in general, you want to see an average of 2% job growth. The theory is with more job growth, you have a bigger population growth, which then means more people are coming in, which means more rents are going up, stuff like that. Then we go to another website called city-data.com.
Okay.
And then we type in those, cities that we were interested in. And we kind of look at the numbers, like what's the crime rate? Is the population increasing? Is the average home price increasing? Stuff like that. And basically we just put all those numbers on a spreadsheet and then compare them with everything else. And then from there, we're going to pick a list of maybe 10 or so cities. You can also look at what's the average pricing. So does the price to rent ratio work on these target markets? And then you just go from there.
Okay. From your initial transactions for investment properties out of state, I'm sure you picked up a lot of firsthand experience of things that you made mistakes on and whatnot. Is there anything, any horror stories or any just pieces of information or just experiences that you had that that you wish you knew now, that you learned through that experience that you wish you knew then or whatnot? It's like, what kinds of things did you learn from your initial buying experiences out of state that you could share with the audience?
Sure. I have a few. The first one is when it comes to rehab work, just in general, whether you're doing a fix and flip or just a make ready for rental, make sure that you use people who have been referred to you. Generally speaking, when you're out there finding random contractors, it's hit or miss, right? But if you have good referrals, then generally speaking, you're going to be better off.
Okay.
Another thing to notice is financing. So when people first hear about, buying properties, cashing out refinancing, using the BRRRR method to just reuse money over and over again, they had these big ideas in their head that they can scale to 100 units in 2 years because they can just buy a property, fix it up, cash out refinance, and continue on. But the reality is most lenders won't do that for you. They have seasoning period requirements. They might limit the amount of loans you have. So really understand the financing and what you can qualify for is a pretty important step before you actually go out and start making offers and like getting on a contract. Otherwise, it might be too late. And then you end up being in a situation where you can't get your money out and your liquidity is gone and it's all bad.
You're stuck.
You're stuck. Another thing I want to mention though is if you plan on doing anything where you are closing twice, like if you're going to buy a property with cash and then you're going to refinance into a long-term loan, or if you're buying a property as a flip and then you sell it within a few months, I highly encourage you guys to look into something called getting a binder policy with your title company. That will dramatically reduce the extra cost you have to do when you sell the property. So just keeping that out there, I'll probably save you all just $1,000.
Yep. Thanks for that advice. And so for all your investments, mainly, are you focused on, are these long-term holds that you're trying to keep for cash flow? Or do you have a different goal in acquiring these properties? Are you trying to like 1031 them into, to even bigger properties?
Yeah, that's a great question. I think right now our plan is to hold them long-term. Going forward, we might start looking into more of the short-term rental space. So,
Okay.
Buying them, then Airbnb them out. We also do have contacts where we might start doing wholesaling and flipping again, but still a lot of this stuff is up in the air.
And on a related note, like what's your bread and butter property type that you're focusing on? Is it like, 1 to 4 units? Is it something else?
Yeah, right now we're looking mostly at 1 to 4 unit properties. And we are looking for something above that 1% rule. So we want to make sure that the property cash flows from day one with, reasonable amount of repairs. We do have a property right now where we bought it from wholesaler for like $125,000.
Yep.
There's a lot of mold in the property. It's crazy. I just posted a video about that on my YouTube channel like a couple of days ago. They'll probably need like $20,000 or $25,000 worth of mold remediation to get that taken care of. And then around $50,000 to $60,000 to bring it back up to rental standards. So all in, we're going to be in for about $200,000. It can rent for about $2,000 to $2,300, but it's worth around $300,000. So after 6 months, we'll do the cash out refinance, get our money back out, and then we'll essentially have that property, without any money into it.
Okay, that makes sense. I mean, the cool thing about the 1 to 4 unit space is that it's generally easier to get financing on them. I mean, I know that you obviously are a hard money lender, but like just talking about the financing of these things, how did you go about it? Did you kind of start conventional, just wait until you maxed out the number of units and then you switch to other types of financing?
Yeah, great question. This one is kind of like a strategy thing, right? Like we wanted to reserve our conventional financing for the bigger projects because we know that we are limited to the amount we can have. And also they have the best terms and the best rates. So usually the bigger loans are the ones we do conventional loans on. And then the smaller ones, we just do cash. Some properties are like in the middle, maybe like in the $100,000 space. We've actually teamed up with some small banks who can do like, I guess, kind of like commercial financing. But those are interesting. Those are like 25-year loans and 15% down with no real limit too. So, the financing is very interesting. You have to talk to a lot of different lenders to find out what's the best policy for your situation.
Okay. Yeah, that makes sense. It's great that you could still even do like lesser than 20% down on non-owner occupied, properties. Are most of the types of financing that you have on these properties, are they, their principal and interest fully amortized types of loans?
Correct. Yep.
Okay. That sounds good. And, do you ever use private money for any of these acquisitions at all?
Usually not, but for this particular property, we are. My fiance's parents have access to a HELOC, which is a home equity line of credit. Their interest rates are super low on there. So they're like, hey, if you guys need extra funds, here you go. So we're using those to fund the purchase of this property, that 125 one I was talking about. And then we'll fund the rehab. And then in 6 months, when we do the cash out refinance, we'll then pay them back with interest.
Okay. In finding deals, are you mainly relying on realtors to find these deals, or do you do them through networking yourself? Are there any other methods that, you go about now since you have so many units? Like, what is the best way that you see yourself finding deals now?
Generally speaking, the agents are going to be like a really key source of finding these off-market opportunities because they're just in the know. Of course, my fiance is also really good at shopping. Like she likes shopping online for houses, not really for like clothes and stuff. So she's always on Zillow and stuff, finds good deals there too. So actually Facebook groups have been like a good like resource to find off-market opportunities from wholesalers.
And you talked about this, price to rent ratio several times in our conversation. It's like, is there a certain price to rent ratio that you look for that's, the bare minimum for it to be a good deal for you?
Yeah, again, like I mentioned, we try to stick with that 1% rule. Okay. So price to rent ratio should be like 1%, or I guess 100. In any case, we want to make sure that we're getting 1% of 1% of the purchase price in gross rents, because that usually covers all the expenses we have, right? Mm-hmm. Principal, interest, taxes, and insurance for the monthly payments, property management expenses, reserves for capital expenses, and then also profit for us for cash flow.
Yep. And then I know that you're not buying turnkey rentals, but I'm kind of curious as to like, how do you know how much work you're willing to put in the property to determine whether it's a good deal or not, since you are buying properties that are potentially like fixers or light fixers?
So that's why it's really good to have trusted boots on the ground team. Mm-hmm. The property managers are usually the ones in charge of doing the make-readies. So they have a lot of experience doing this all the time. I always do insist on getting an inspection report on all the properties that we put offers on. They're pretty cheap, right? Only like $300 or $400. And they'll tell you everything that's wrong with the property with pictures. So you can send that report to your property manager. Your property manager can send that report to other contractors. Contractors can walk inside and give you bids. So then we'll have a good understanding like, okay, it'll cost maybe $20,000 or $30,000 to fix this property.
Mm-hmm. Okay, that got you. So like, in general, what types of renovations are you doing to a property?
Yeah, that's totally property specific. But yeah, so some properties, right, especially the really like cheap ones, they may not have a good HVAC system. So heating, ventilation, and AC. And in the markets that we're in, AC is important. Not so much here in the Bay Area, right? But in the East Coast and in Central Texas, they need them. So then you budget in, okay, here's so much for an AC, new paint throughout the house, possibly changing your flooring. And here's the thing, we're not doing HGTV beautiful remodels here. We're just making them rent ready. And that's basically it.
Right. I mean, the more of those HGTU models, you see kind of that stuff in the Bay Area flips, but like you're dealing with properties that, that are sometimes under 100,000. It's not expected to do that.
Correct.
So Are you trying to hit a certain number of doors as you grow this, or like what's kind of in the horizon for what you got for goals?
Yeah, that's a good question because I feel like when we were just getting started out, it's always like, oh, I want like $10,000 a month in passive income. That's like a popular one, or I want to get to 100 doors. But now that we're at a certain level, it's kind of weird to say this, but I don't think we like need like more money per se. It's more like we want to do more cool things. So that's why we want to branch into that short-term rental space, because it is like a new activity for us where we can go in and make the properties a little bit nicer, maybe a little bit more unique, where we can then, market it on like VRBO or Airbnb and then try that route because we don't really have too much experience in that field. Another thing is to get more into like the wholesaling and flipping space. So we have a lot of partners that we know we can work with in these different markets to like do these kind of projects with. So that's kind of going to be our main focus for 2022 going forward.
Okay, yeah, that makes sense. So like the idea of doing Airbnbs is these would also be in your with the out of state rentals that you're doing as well, correct?
Exactly. Yes.
What about syndications? Do you ever dabble in any of that stuff?
I've been asked lots of times to do syndications, especially because we do have platforms like the podcast meetup group, etc. But I don't know. I just never really got into syndications. I totally understand the model and I understand why people love it, but it just hasn't really been something that's super interesting for me. So that's why we haven't gone into it. But who knows? Maybe in the future, when we do have all these things done and we start doing, commercial, multifamily, or something like that, then yeah, it could be an option.
Yeah, but I mean, it's like a lot of time, syndication sometimes feels like you're not even doing things. It's so passive. It's like, at least with you have more control and you get to control the financing and all that stuff, which is also nice too, because you have more of a say of where the investment goes.
Yeah, I've had a lot of syndicators on my podcast too. And it's sad to say, but sometimes those are kind of boring interviews because they're all very similar, right? Whereas the people who are doing their own operations, it's very interesting because you get to hear exactly what they're doing for their like particular niche.
No, absolutely. And so I also know that you do, I'm kind of switching the topic a little bit, but I also know that you've dabbled in flips and stuff. Tell me more about that. I mean, I don't think those are out of state, right?
Yeah, those have all been local. So I did a couple of flips in Sunnyvale and a couple of flips in Santa Clara as well.
How did you get into that space? And are you still doing it?
Yeah, so I got into that space because, like I mentioned, I joined a lot of local real estate meetup groups. And even though I really wanted to do the more buy and hold strategy, it seemed that a lot of people here in the Bay Area, they prefer flips. And it makes sense because, like I mentioned earlier in the show, buying a rental here as a straight rental doesn't usually make sense by itself. So, but people are doing really well with Bay Area real estate, mostly because the fix and flip realm is so good. And people are often making six figures or more per flip that they do. In fact, the first flip that I did, I made $300,000. So I thought I was a genius. Flipping was a very interesting experience, very difficult while working full-time as an engineer. Yeah. So if you are working full-time, I recommend that you partner with someone who can be more like there on site, because with the Bay Area, like it is a little bit more risky. Your financing goes up because the prices are just so much greater. So you really want to be on top of your stuff if you're going to be flipping here in the Bay Area.
Okay, yeah, that makes sense. What are your favorite real estate investing strategies? I mean, we talked about the Burr method. Like, that's not the main thing that, that drives your investing or whatnot. Like, what methodology are you doing for what do you follow?
Yeah, I think right now we've mostly been following just the typical buy and hold strategy. It's so interesting because I flipped houses. It's profitable, but stressful, right? Whereas the buy and hold strategy is very easy, but you can make a lot of money from it because you just don't do anything. You hold onto the property and you blink, it's 5 years later and your properties have all doubled in value. And that's cool. And you get long-term capital gains taxes on it instead of paying like short-term capital gains taxes. So I don't know, I like the buy and hold method, and that's probably what we're going to keep doing.
No, it's no, real estate's so great like that. Just, you buy real estate and wait, and just the longer you wait, the better it is, and it's just great that you've been able to accumulate, so much. Remind me again, when did you quit your W-2 job to get full-time in this?
Yeah, so I left the engineering role middle of 2019. So it's been just over 2 years now.
It's really not even that long. And just, can I ask you, so while you were doing that W-2 job, approximately how many out-of-state rentals or just properties in general were you acquiring while you were still working?
So while I was there, I had 6 units as rentals. I had this property here as like a house hack. And then I had flipped, I think, 4 or 5 properties while working full time.
Are there any other areas in the country that you are thinking of potentially investing in that you haven't invested in yet?
Yeah, so it's funny, like because of COVID, right? We were all sheltered in place for a long time.
Right.
Once we got our vaccines, we went out. We went to Las Vegas first, and we were enamored by the place. We thought this is this amazing location. Let's buy a property here. We were thinking about buying in Las Vegas very seriously, but we found out the short-term rental laws there were very strict. So we decided, you know what, let's put it on pause for now. Then a few weeks ago, we were in Nashville for a conference. Yeah. We felt the same way. Wow, Nashville is amazing. Broadway Street is great. Food here is great. And we felt like this is a booming area. Again, short-term rental space just wasn't really cutting it. And we didn't really want to hold on to properties long-term there at the moment. So yeah, right now, I don't think we have any plans of branching out to new markets. I think we're going to try just different strategies in the markets that we're in. Because like I mentioned, the hardest part is creating that team. Yes. So we already have the team members. Now we can just change the strategy a little bit.
Okay. A lot of the folks that are listening, are newer investors in the real estate space. And any best piece of advice that you could offer for those, jumping into real estate investing?
Yeah, if you guys are brand new and you have no idea where to start, I highly recommend joining a local real estate investing group. So, mine's online. You can feel free to join mine. Just check it out at meetup.com/EverythingREI. But if not, of course, there are thousands of meetups all over the country. So you can just go to meetup.com and type in real estate investing, join a group, talk to a lot of investors, figure out what strategy really like vibes with you, because all strategies work, right? Mm-hmm. What strategy do you enjoy doing? And then follow the people that are doing that particular strategy.
Mm-hmm. When you first started getting into real estate investing, were there any even books that kind of jolted your real estate investing career that you might even recommend?
The typical book that everyone recommends is Rich Dad Poor Dad, just because that is like that original book that kind of changes your mindset, which is very important. A more technical real estate book that I like is called The ABCs of Real Estate Investing. So go and check that book out. I think it'll help you get a good understanding of what it's like to be a real estate investor.
Okay, got it. And then any other resources available for folks that are interested in out-of-state investing? Because I know you teach this stuff as well.
Yeah, so we do have a course. It's very affordable, only $350. It's called Remote Rental Riches, where Sharon, my fiance, and we go over how to buy, every step that's involved in buying your very first out-of-state rental property. So again, that's Remote Rental Riches. And for anyone listening to this podcast, we can give them a code, I think for the first 5 people or so. The code can be School of Cash Flow. So just type in School of Cash Flow and you'll get 20% off that course.
Oh, that's amazing. And how can someone get in touch with you and learn more about you?
Yeah, so you can check out my website. It's everythingrei.com. Or if you want to email me directly, that's Sean, SEAN, at everythingrei.com. I also do have a podcast called the Everything Real Estate Investing Show. We have over 240 episodes of great people like yourself who've come on and shared their wisdom about real estate investing. And I also do have a YouTube channel called youtube.com/SeanPanInvest. And again, we go over different real estate investing topics twice a week.
Got it. I love the fact that you've offered, all these resources and whatnot, your wealth of knowledge. And so thanks, Sean, for joining me on this episode. Really appreciate what you do. Appreciate all the info and value you provided my listeners. Congrats to all your investing success and to the success of, your podcast and meetup group. And to my listeners, thank you for checking out this episode of the School of Cash Flow. And until next time, live life abundantly. Thanks, Sean.
Thank you.
Thanks for listening to another episode of the School of Cash Flow. We hope you enjoyed our deep dive into all the tips and tricks you can use to help you on your passive investing journey. In the meantime, you may visit www.cashflowschoolpodcast.com for more great episodes. Don't forget to subscribe, rate, review, and share. That's all for this episode, folks. See you next time.